Welcome back in YouTube. Today we're going to talk about Warner Brothers Discovery. Now this one spun off at AT&T a while back and it has not performed well. Basically when the spinoff happened it was around $25 a share, peaked up to $31.55 and has done nothing but sell completely off day in and day out, reaching a 52-week low of $12.77. Yahoo has this one undervalued by 43%. Obviously we're not going to go off of that. Really quick, before we get into Warner Brothers Discovery, I want to talk about what happened pre-market today. Now, the market sold off pre-market. Futures were down, along with crypto being down pretty big here, guys. Crypto was hitting $19,500 and came screaming back up when the bell rang, and now we're back to about flat. Interesting action. Wanted to bring it to your attention. Seems a little shady to me. Not sure what is going on, but guys, keep an eye on this market action. Something's telling me something is up. So I find this interesting as the energy companies are probably going to be what shines in earnings this quarter, and yet energy is just absolutely nosediving along with the energy companies. So be interesting to see how this finishes out. Obviously, this is taking into consideration either one or two things. We're going to get extra supply or demand is going to diminish drastically. Anyway, let's get back to Warner Brothers Discovery. When we look at it from a valuation standpoint, we can see that it looks pretty fair value here, especially when you're comparing it to your companies like Netflix. And even after the Netflix sell-off, it's still trading at a 16 PE ratio, which Warner Brothers Discovery is well below that. So as we can see here, trailing PE looks to be undervalued, but forward PE seems to be pretty elevated here. So we're going to have to run valuations ourselves and figure out what could be a fair price for this stock, trading at a pretty low enterprise value to EBITDA as well. Basically trades between an 8 to 9 enterprise value to EBITDA and as recently has gone as low as 5 to 6. So could definitely have some value opportunity here. A couple things I like about Warner Brothers over Netflix. They have a pretty extensive content library, which essentially is going to be a driving factor to get subscribers here. So having a strong content library is really, really nice, first and foremost. Secondly, when they finish a project, they do go to the cinema. And for me, guys, cinema seems to be coming back here a little bit. We're starting to see more people out and about. We're starting to see more people go do things. And cinema and going to a movie is still somewhat affordable for most people's budgets, and it's something to go out and do. So with that being said, there's a couple reasons why I like Warner Brothers a little bit more than Netflix. They have the ability to get that extra stream of income through box office sales. Now with these box office sales, if they can just break even, it's almost a bonus when they bring it to the streaming platform for their subscribers. Anything above and beyond breaking even is just going to be icing on the cake for their business model. When we think about streaming platforms, people are going to have to make some hard decisions here, as you know, there's definitely a lot of competition going on with streaming, where you want to talk about Paramount, you want to talk about Netflix, you want to talk about Disney, and now you want to talk about Warner Brothers Discovery. A lot of competition here, and I do think there could be multiple winners, but I would probably say that the top 5 are going to be who wins in this game. As we can see here, 5-year expected growth rate for Warner Brothers Discovery is about 10% over the next 5 years compounded. So double-digit growth for the company. Definitely can see that happening. I actually think this could be an understatement. They could absolutely do more than this depending on what kind of content is out there. I want you guys to remember something. During COVID, content wasn't really being created, as actors could not be in the same room together. People were not going to the cinema, and this definitely spelled chaos for companies like Warner Brothers Discovery. So there has been somewhat of a disadvantage, in my opinion, for a company like Warner Brothers Discovery. It's interesting to see what this company can do going forward, and I think paying attention to the next quarterly earnings is going to be very, very key, both from a guidance standpoint, but also how are they performing on their balance sheet. Interesting enough, Stock Analysis has this as a fair price target of $33, which gives it 140% upside and a buy rating here. So I'm going to break this down and figure out what I think fair market value is for it. When we look at forecasts, you have as low as an $18 price target all the way up to $54. So well below all these targets here. So we're going to plug in their financials here and figure out basically what we should be paying for the company. What could we find for fair market value here? Right now I have a growth rate of 10% for the next 3 years. I'm going to bump this up to 8% for year 3 through 6, and then 4% from years 6 through 10. EBITDA margins in the company have been fairly strong, so we're going to keep those stabilized. Average revenue growth has been roughly 5% over the last couple years. Now, I do want to take into consideration that I do think that COVID could have caused a wrench in their growth rate. So, I'm definitely being a little bit optimistic that they can get double-digit growth for the next few years and even slow down a little bit. So I'm coming under what Yahoo's expectations are. When we run the analysis, I can see buying the stock between $12 and $10 a share, with a fair market value in 2030 being right around $28 to $29. And so some comments that I would like to make here. They have a lot of debt. It's a competitive market. Those are definitely some cons I see with Warner Brothers. Some pros: very, very strong content library. Secondly, they can capture capital in the box office, which is an advantage, in my opinion, over a company like Netflix. The next thing I want to bring up is the iconic brands that they really have here. I mean, everything from Batman to The Matrix to Mortal Kombat, Friends, obviously Sex in the City is another popular one. So just iconic brands across the board that I think are going to be here for a long time. When I look at the streaming world, it really reminds me of kind of your Coca-Cola and Pepsi type brands. It's going to be those companies that have that staying power, it's going to be those brands that have that staying power, that have been around for a long time and people still crave and want the content, much like they want that Coca-Cola or Pepsi. So to me, it's the same thing. It's the brand awareness, the intangibles that you can't really put a price tag on, that makes Warner Brothers an interesting play in the streaming world. And when we look at it from a valuation standpoint, I can understand buying it at this level when we think that I basically have a fair price target between $10 and $12. And it's currently trading at $13.89 and has hit as low as $12.77. So it's getting pretty close to my wheelhouse here. If you guys are on my watch list, it's free. I basically have it at $10, and below is basically where I'm personally looking to build a position. And I hope to acquire some shares at those levels, as I do like the company. And there is some risk with this company, as debt is high, the market is very competitive, and nobody really knows who the winners and losers are going to be. As I stated before, I think there's going to be multiple winners in this, and I just think that Warner Brothers has an opportunity to be one of those multiple winners. I don't know if they're going to be at the cream of the crop, but I think they could be somewhere at the top here, which makes them an interesting play long term. Now, with that being said, there is also downside to this, as costs to make movies go up, margins can shrink as this streaming world gets competitive. They might not be one of the top players, and therefore people might actually discontinue their services. So there's definitely a lot of risk with this one, but I think buying it at the price that we talked about today makes a lot of sense for me personally. Obviously, guys, you have to do your own due diligence at what risk you're willing to take on for Warner Brothers Discovery. So as always, guys, really appreciate your time. Hopefully you enjoyed my dive into Warner Brothers Discovery, and we will see you next time, investors. Peace.